There's a company that handles 8.5 billion searches every single day, runs the world's largest video platform, has the fastest growing cloud business among the tech giants, and just crossed $400 billion in annual revenue for the first time. And somehow the stock might still be undervalued.
When a $3.6 trillion company trades at 27 times earnings with 30% upside to consensus, either the analysts are wrong or the market hasn't caught up yet.
Welcome to Charged Alpha, the S&P 500 stock encyclopedia. I'm Hudson Thomas, and today we're breaking down Alphabet, ticker Google, the company behind Google Search, YouTube, Google Cloud, and the most ambitious AI bet in Silicon Valley. Lana Chen has the numbers.
Let's get into it.
Alphabet is headquartered in Mountain View, California, originally founded as Google in 1998 by Larry Page and Sergey Brin in a Stanford dorm room. Today, it's a $3.6 trillion conglomerate with 190,000 employees.
The business has three core revenue engines. First, Google Search, which commands 90.8% of global search market share and generates the majority of advertising revenue. Second, YouTube, the world's largest video platform with both advertising and subscription revenue, growing 22% year over year. Third, Google Cloud, and this is the growth story, running at 48% year-over-year growth, faster than both Azure and AWS. It's now profitable and expanding rapidly into enterprise AI workloads.
And then there's the Other Bets segment, which includes Waymo, their autonomous vehicle business that's now doing 500,000 paid rides per week and just raised $16 billion at a $126 billion valuation.
The competitive landscape is intense. Microsoft is the closest rival across search, cloud, and AI. Meta competes for advertising dollars. Amazon's AWS leads in cloud market share, and OpenAI's ChatGPT is the existential AI search threat. But Alphabet's moat is distribution. 5 billion plus users across Search, YouTube, Android, Gmail, and Chrome. No other company has that scale of daily user engagement.
Sundar Pichai has been leading the company for 11 years. Google CEO since 2015 and Alphabet CEO since 2019. He was born in Chennai, India, earned his engineering degree from IIT Kharagpur, then a master's from Stanford and an MBA from Wharton.
He joined Google in 2004 and rose through the ranks by leading Chrome, Android, and Maps, some of the most successful products in tech history. Under his leadership, Alphabet's market cap tripled from $1 trillion to $3.6 trillion. He's known for being steady, product-focused, and consensus-driven, not the flashiest CEO, but consistently delivering. Alphabet is trading at $299.13 with a market cap of $3.63 trillion. The 52-week range runs from 163 to about 310, so we're near the top of the range, up 83% year over year.
Valuation.
Trailing PE of 27.5, forward PE of 24, price to sales of 9 times. These are attractive multiples for a company of this quality and growth rate. Alphabet actually trades cheaper than Meta and Amazon on a PE basis, which is unusual given its market position.
Revenue breakdown.
$402.8 billion, trailing the first time Alphabet crossed $400 billion. Q4 2025 was $113.8 billion, up 18%. The acceleration is notable. Q2 was 97.8, Q3 was 102.6, Q4 pushed to 113. That's sequential acceleration at massive scale.
Margins.
Gross margin is 59.7%, operating margin is 32%, EPS of 10.88 trailing. These margins have expanded meaningfully as cloud turned profitable and AI efficiency gains flowed through the business.
Cash flow.
Free cash flow of $72 billion. Operating cash flow $115 billion. Capital expenditure of $43 billion, though that's about to ramp dramatically with the $175 to $185 billion 2026 CapEx guidance. Cash on hand is $126.8 billion against $67 billion in debt. Current ratio of 1.85. The balance sheet is a fortress. Overall, Alphabet's financial health is strong. Revenue acceleration, margin expansion, massive cash generation, and a fortress balance sheet. The CapEx ramp is the main near-term headwind, but the business quality is exceptional.
Analyst picture?
Overwhelming consensus. 67 analysts cover the stock, 60 rate it buy, 6 hold, 1 sell. The median price target is $387.50, implying about 30% upside, range from $250 to $450.
Key calls?
Google Cloud at 48% growth is the standout metric. It's now the fastest growing major cloud platform, ahead of Azure and AWS. Gemini AI has been integrated into search without cannibalizing ad revenue. That was the bear case fear that hasn't materialized. YouTube ad revenue grew 22%, and Waymo's $16 billion fundraise at $126 billion valuation validates the autonomous driving thesis.
Bull case number 1. Google Cloud at 48% growth. This is the fastest hyperscaler, and it's now profitable. Enterprise AI workload migration to Google Cloud is accelerating, and the combination of Gemini AI models with cloud infrastructure creates a compelling enterprise value proposition.
Cloud alone could be worth over $500 billion as a standalone business at this growth rate.
Number 2, Gemini AI with 650 million monthly users. It's been integrated into search, generating new query types and increasing engagement without hurting ad monetization. That was the number 1 bear fear, and it didn't happen. Number 3, Waymo at scale. 500,000 paid rides per week, targeting 1 million by year end. The $16 billion raise valued it at $126 billion. That's meaningful option value not fully reflected in the stock. Number 4, YouTube monetization. Shorts, premium subscriptions, and YouTube TV are all growing. The advertising platform is the second largest in the world after Google Search itself.
Bear case. First, antitrust. The DOJ appeal is ongoing, and potential remedies could force changes to search distribution deals, particularly the default search agreement with Apple. Chrome divestiture has been discussed. These outcomes are multi-year but real.
Antitrust is the sword hanging over the stock.
Second, the CapEx ramp. 175 to 185 billion in 2026 is nearly double the prior year. That compresses free cash flow significantly and creates execution risk if AI workload demand doesn't justify the spend. Third, AI search competition. OpenAI's ChatGPT still leads with 55% generative AI market share versus Gemini's 20%. If ChatGPT or Microsoft Copilot starts to meaningfully displace Google search queries, the advertising revenue machine is at risk. Fourth, macro recession. 80% of revenue is advertising, making Alphabet highly cyclical.
How does Alphabet compare to the mega-cap peers?
Microsoft at 23 times earnings is actually cheaper, with slightly higher revenue growth and Azure growing at 39%. But Google Cloud is growing faster at 48%. Meta at 25 times earnings with 20% ad revenue growth, the closest advertising competitor but no cloud business. Amazon at 30 times earnings with 14% growth. AWS leads in cloud market share but is growing slowest of the 3 hyperscalers.
So Alphabet is in the middle of the pack on valuation with the fastest cloud growth.
Exactly. That cloud acceleration is the differentiator.
Options.
Put-call ratio of 0.78, bullish. IV at the 52nd percentile, moderate. Call clusters at 320 and 350 suggest positioning for new highs. Put support at 280. The options market likes the setup.
Insiders.
Standard mega-cap pattern. 8 sells, 0 buys. CEO Pichai and executives executing Plan 10b5-1 sales. Nothing unusual or alarming given the compensation structure.
Key metrics to watch.
3 things. First, Google Cloud revenue growth rate. 48% is exceptional. Any deceleration below 40 would be a negative signal. Second, search revenue growth. 18% in Q4 needs to sustain as Gemini AI scales. If AI integration starts cannibalizing ad clicks, that changes the thesis. Third, Waymo ride volume trajectory. 500,000 to 1 million weekly rides by year-end is the target. Execution on that signals whether autonomous driving becomes a real revenue contributor.
Lana, bottom line on Alphabet.
Alphabet is one of the highest quality businesses on the planet. $400 billion in revenue, 60% gross margins, $72 billion in free cash flow, and dominant positions in search, video, and cloud. At 27 times earnings with 30% upside to consensus, the stock offers a rare combination of quality and value among megacaps. The risks are real. Antitrust, CapEx intensity, and AI search disruption. but the business is executing at an exceptional level. The key metric is Google Cloud's growth trajectory. If it sustains above 40%, Alphabet reprices as the AI infrastructure winner alongside Microsoft.
We'll close with Sundar Pichai himself. He said, AI is the most profound technology we're working on today. It will be more transformative than fire, electricity, or the internet.
More transformative than the internet, coming from the CEO of the company that organized the internet. That's either the conviction of a leader who sees the future or the biggest overstatement in tech history.
That's going to do it for episode 55 of Charged Alpha, Alphabet, ticker Google. If you found this deep dive valuable, share it with someone investing in big tech or AI. And hey, if you want to run the same research workflow we used to build these episodes, everything's free at chargedalpha.com. 11 screening tools across stocks, ETFs, options, crypto, bonds, REITs, commodities. No sign-up, no paywall. The same data that powers this show is sitting there waiting for you to run your own screens. Check it out. Until then, I'm Hudson Thomas.
This podcast is for informational and educational purposes only. Nothing discussed today constitutes a buy, sell, or hold recommendation for any security mentioned. All investments carry risk, including the risk of total loss of principal. Past performance does not guarantee future results. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The hosts and producers of Charged Alpha may hold positions in securities discussed on this show. This episode was researched, written, and produced using AI-assisted tools. All data has been aggregated from publicly available sources and may contain inaccuracies. Data is current as of the recording date and may have changed.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.